I want to buy a business. Now what? When you're buying a business, there are three things that you have to know in order to navigate a successful transaction. First is price. And I think price is fairly self-explanatory. It's the amount that you're going to pay to buy the business. Second is terms. The terms of the deal can be a little bit more complicated than the price. Common terms that we see include earnouts, which refers to the amount of consideration that's going to be paid to the business based on how the business performs or how the owner performs after the transaction is completed. Seller financing, or the amount of financing of the purchase that the seller will finance, meaning that the buyer will be given the opportunity to pay the seller back over time, just like a loan for the purchase of the business. A stock swap, whereby the buyer is using their own stock to finance part or all of the purchase of the business. Or a stock versus an asset sale, which brings up highly complicated tax issues which go beyond the scope of this particular video. Price and terms work together like dancing partners. When prices favor the seller, terms tend to favor the buyer, and vice versa. When terms favor the seller, price is going to favor the buyer. So if negotiating the lowest price possible is your objective, then you're going to need to give on the terms so that they're most attractive to the seller. The third dimension of a potential business purchase is figuring out how you're going to pay for it. Now, this is fairly simple if you're in a position to simply write a check and pay cash. But if you're not in that position, then you may need to explore external financing options, such as acquiring a bank loan, raising private equity, or finding other sources. Putting these three things together can make the transaction a very complicated process. And that's where the benefits of having an experienced transaction advisor come in. Not only can an experienced transaction advisor help you with an independent valuation, but they can help you make sense of the terms that are being discussed in the sale and understand what that trade-off should be between the two dancing partners. For example, if you're going to pay in mostly cash, then maybe you're going to negotiate more favorable earnout terms. Maybe you're going to pay less cash, but you're going to allow a stock deal which may be more beneficial to the seller. The point is that having an advisor helps you, the buyer, understand the nuances of navigating a complex deal. An advisor also can help you understand what the options are for financing the transaction and what the relative strengths and downsides are to each potential option. For example, if you're going to borrow money to finance the transaction, then you need to be very careful about making sure that the company is going to be cash flowing sufficiently to repay the debt that you've borrowed on time. On the other hand, if you choose to go the private equity route, then be advised that you're going to be sharing control with that private equity investor and also some of the back-end return, probably a significant piece of the back-end return. The point is that a good deal advisor brings experience and objectivity, helps keep you from making a bad deal out of emotion or just by simply being confused. And a good transaction advisor will help clarify the options that you have in front of you so that you can make the decision that leads to the best outcome. One example where we helped a client buy a business was a client who had a failing business, but he targeted two businesses to acquire. He wasn't sure he'd be able to buy those businesses because he didn't have the cash to pay for them. But we helped him make those acquisitions by structuring the deal in such a way that the sellers were going to get extraordinarily beneficial terms in exchange for being lenient on the cash, including the price paid. As a result, those two businesses wound up being very successful once they transferred to our client. He paid off the funds that he borrowed to buy them within 5 years. Now his net worth is over 10 times what it was before he bought the businesses. And there's never any discussion of his business being on the brink of failure ever again. So if you're thinking of buying a business and you think you might need a transaction advisor, or you just have a question, click on the link below and we'll be happy to speak with you about your situation.